Airbnb's asset-light business model to travel has attracted me as an investor for several years now. In this video, I'm going to revisit my Airbnb stock recommendation. I've had the stock rated as a buy for several years now, and I'm going to revisit the company here today, evaluate the company's revenue growth over recent quarters and recent years, look at the company's cash flow expansion, look at the returns on investor capital, and then look at the updated valuation on a forward price to earnings and price to free cash flow basis to update my recommendation and let you know if I still think Airbnb stock is a buy at current prices. So let's jump in. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So in recent years, Airbnb's revenue growth has decelerated, and that was to be expected. The boom in demand as economies reopened created a surge in revenue for Airbnb in 2022. 2023 was another solid growth year for Airbnb, and now consumers are starting to normalize their spending behavior. And what I mean by that is there is no offsetting impacts from the pandemic, right? During the pandemic, you had consumer behavior shift dramatically into consuming things at home. These are, things like electronics, streaming content, etc. And then when you had the reopening in 2022 and 2023, and to some extent in 2024, consumers were spending more money, a lot more than usual, away from home on things like travel, concerts, theme parks, etc. And now here in 2025, we're starting to see a more normalized consumer behavior pattern where it's an relatively equal balance between away from home consumption and at home consumption, similar to what we saw in 2019 before the outbreak, right? So we had 4 years or so of disrupted consumer behavior. And in 2025, we're back to the types of consumer behavior we saw in 2019. And that's okay. That's not an alarming sign for Airbnb. People worldwide in 2019 spent over $1.5 trillion on travel accommodations. So the travel industry is massive and growing. Airbnb operates in that industry, in my opinion, in one of the most effective ways in the asset-light business model. And I'm going to talk more about that when I talk about the cash flow from operations, which has soared for Airbnb in the last 5 years. The company generated $4.5 billion in cash flow from operations over the trailing 12 months. That's up from a negative number in 2021. So the company's cash flow has soared, and it has done so quickly. And it's the business model that leads to this kind of cash flow growth. And that business model has created a sustainable competitive advantage for Airbnb that would be difficult for rivals to emulate. It's had such a head start in this category. And what I mean by the business model is that Airbnb just operates the platform. It doesn't own any of the inventory that gets listed on the Airbnb website or app. It just brings together people that have an extra room or an extra house that they want to rent out for part of the month. And it brings that together with people that want to travel, want to spend some time away from home during the month. And so Airbnb just takes a transaction fee from every transaction on the platform. And so that's what I mean by asset light. The hosts are the ones that bring most of the assets to Airbnb, and they allow Airbnb to monetize those assets. And these are very expensive assets. If you think about the home value, they can be upwards of several millions of dollars. And people are bringing that to Airbnb and saying, here, we're going to let you make some money off of our $1 million asset or $2 million asset. And we'll provide the labor, we'll do the accommodating, we'll create the experience for the guests. All we need from you, Airbnb, is for you to create the platform which then attracts the customers. So we'll let you do the customer acquisition part. We, as the host, will do almost everything else. And we're willing to pay you, Airbnb, a fee for facilitating these services. And in my opinion, that's a great business model. It's worked really well for Airbnb. And really, the only thing that's stopping Airbnb's growth is cities that are getting concerned with too many units being turned into Airbnb units where people are renting out too much and neighbors are not happy with that, right? If you're living in a community and your neighbor or the house next door has been turned into an Airbnb, you're not happy about that because the if they were people that were living there full time instead of it being an Airbnb, the property would be maintained better. It wouldn't be so loud. There wouldn't be so many parties. And so you're not happy about that. And so people have complained. And that's really the big risk for Airbnb is that cities become more restrictive to its growth because organically, the business is built in such a way that if there were no limits on it, like these constraints, it would continue growing. It's the virtuous cycle would just keep feeding on itself and Airbnb could grow much faster. And so unsurprisingly, the returns on investor capital have improved dramatically. And at 26%, I think there's room for significant growth here. This business model is built in such a way that I wouldn't be surprised if the returns on investor capital approach over 50% over the next several years because of that asset-light business model and how lucrative it's been for Airbnb and the competitive advantage it's built with the existing network of hosts and guests and all of the reviews that have been built up and the reputation that has been built up. That will be so difficult for anyone else to match. And so let's look at valuation. I've talked about all of these great things about Airbnb's business. Surely it's trading at an expensive valuation. It's actually not. On a forward price to earnings basis, it's trading at a forward PE of 25, which is near the cheapest it's been all year. And similarly, on a price to free cash flow basis at 18, it's near the cheapest it's been all year. This business, of course, is cyclical in that if macroeconomic growth, which has been under question, slows down, Airbnb's business will slow down more so than most other businesses because when people lose their jobs, one of the things they're going to cut first is travel. And so Airbnb's business will be hurt, but that's a short-term effect. The economic cycle is always going up and down. So if the economic cycle turns downward and you get lower prices on Airbnb stock, I think it's a great buying opportunity. So at current prices, I do think Airbnb stock is still a buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.